let's have a look at part 2A. Okay, we need to refer to matter 1 and we need to discuss with supporting calculations the appropriate accounting treatment of the retrenchment costs to be paid to the employees of the 80 branches, which will be disclosed in the financial statements of FIRST for the year ended 31 December 2019 in accordance with IFRS. Discussion with regards to presentation and disclosure and conceptual framework are not required. Okay, so guys, when we look at this, we need to discuss the recognition. What do we have to recognize, classify, assets, liabilities, and so forth. We need to discuss the amount, and they indicate to us here, guys, to be disclosed. Therefore, I've included a bit of presentation, but they also indicate we don't have to go into detail in terms of the presentation. Now, 12 marks. Therefore, again, being conservative, I will include one complete sentence, which will include my theory and my application, and hopefully this will be 1 mark in the solution. Right, now you know that this is retrenchment costs. Therefore, you have identified that due to the fact that this is retrenchment costs, that this will be your termination benefits. Now, you have 2 options. Either you have studied your IS 19 revision plan, or if you can't remember what to do, you will have to open your IS 19, your textbook, your contents page, right? Okay, so guys, I'm going to make use of both options, but first, I want you to please open your IS 19 textbook for me. Open your contents page. Right, by now, you should have a flag included indicating to you that this is your IS 19. And now you scan through each line quickly. You want to identify where is the termination benefits section. Right, we're able to identify that this will be included in paragraph 159. Therefore, we need to open this and we need to identify what do we need to do. Right, guys, but by now your section should be highlighted. Maybe your textbook should work for you. Okay, so I'm briefly going to look at this again, but not in detail. We don't have time. Remember, it indicates to us how to account for our termination benefits and what is termination benefits. Remember, termination benefits, there will be no work performed by the employee. Okay, therefore we need to identify that this will be specifically a lump sum payment to our employees, and this will not be in exchange for any services. Therefore, our recognition, we will have to recognize a liability and expense for termination benefits at the earlier of the following dates: when the entity can no longer withdraw the offer, and or when the entity recognizes costs for a restructuring that is within the scope of IS 37. Now that rings a bell, guys, because they have indicated to us that they have recognized a restructuring within the scope. Then the termination benefits payable as a result of employees' decision to accept an offer of benefits in exchange for the termination, the time when the entity can no longer withdraw from the offer will be at the earlier of when the employee accepts the offer and when a restriction on the entity's ability to withdraw the offer takes effect. This would be when the offer is made if the restriction existed at the time of offer. Guys, keep in mind, we're going to look at our timeline just now. Okay, now 167, no longer withdraw from the offer when the entity has communicated to the affected employees the plan of termination, meeting all of the following criteria. Actions required to complete the plan indicate that it is unlikely that significant changes will be made. The plan identifies a number of employees, job classification and functions, location, and the expected completion date. The plan establishes the termination benefits that the employees will receive. And 168, an entity recognizes the termination benefits. The entity may also have to account for plan amendments. Guys, luckily no plan amendments here because they've indicated to us the recognition of the measurement as well. Okay, now measurement. Measurement, an entity shall measure the termination benefits on initial recognition and shall measure and recognize if there's any subsequent changes. Okay, now I want you to refer back to the given scenario. If we refer to our given scenario, you will remember they've indicated to us the heading, closure of 80 branches, and we had to refer to Annexure A. Okay, now let's refer to Annexure A. Annexure A, extract. Okay, they indicate to us on 10 May, they started to discuss, but no decision were made. On 30 June, the board voted in favor of the closure, and a decision was taken that between 70 and 80 branches will be closed. On 15 July, the task team identified the 80 branches which will be closed. The board requested a meeting with the trade unions. Okay, they met on 8 August with the trade unions, and then the communication with the employees commenced on 31 August 2019, providing all of the details. Remember now, guys, this is in terms of the fact that they can no longer withdraw from this offer. On the 4th of September, they made the first public announcement that they will close. And then, guys, not year end, 30 September 2019, they recognized restructuring provision in terms of IAS 37, costs to be paid at year end. Okay, now guys, you're still with me on this one. Now, on a timeline, if we look at this, what happened? They met with the trade unions on the 8th of August. Then, on the 31st of August, they meet with the employees, which will be affected. On the 4th of September, they made a public announcement. And at the end of September, 30 September, they've recognized a provision in terms of IAS 37 relating to the amount to be paid at year end. Now, our requirement states that we need to discuss the recognition, the amount, and I've identified presentation because they've indicated which will be disclosed in the financials. However, they also indicate the discussion with regards to presentation and disclosure and the conceptual framework are not required. Therefore, guys, this is a little bit, what do we do? Rather include something, if you ask me. Okay, now we need to start off with this. Before we start off with our theory, application, conclusion, refer to your revision page for me. I just want to indicate to you that all of this is included on your revision page. When you look at our pink blocks, our termination benefits. What is a termination benefit? It's the decision to terminate before normal retirement. We need to recognize the liability and expense at the earlier of the date when the entity can no longer withdraw from the termination, or when the entity recognizes costs, restructuring, measurement, the nature of employee benefit, guys, our journal entry, and we need to identify if this payment will be within 12 months or after 12 months. Now, they've already indicated to us this will be by the 31st of December 2019. Okay, guys, and all of the principles included on your revision page as well. Now, let's answer the question. Right, now first we need to indicate why this is termination benefits. Now, the retrenchment costs will be termination benefits because our employees will not provide a service in return for the fee that they will receive. Okay, therefore we are able to identify that this will be termination benefits, And as per IFRS 19, we will have to recognize our liability and our expense at the earlier of the following two. Either number one, when the entity can no longer withdraw the offer, or number two, when first recognize related restructuring costs. Okay, now can no longer withdraw from the offer. If we look at our timeline, you will remember that they have communicated this termination benefits package to our employees on the 31st of August 2019. Therefore, this date, they can no longer withdraw from the offer because this is the date when they communicated this to the employees. Therefore, on the 31st of August 2019, they communicated the details in terms of the termination plan to all of the employees. Now, remember, if we refer to our theory, paragraph 169, we need to discuss the fact that it is unlikely that there will be any changes made. Therefore, when you look at the scenario provided, we know they've already communicated, they've already indicated to the public. Therefore, at this point of time, it is unlikely that there will be any changes to this plan. Remember, you need to write this out, guys. Okay. Then B, they have already included in the plan the number of employees, the job classifications and functions, the locations, and the expected completion date. Now we need to apply this. Right. Therefore, when you look at the left side of your screen, they have indicated to us that there's 80 branches. They've provided the number of employees at each branch being 500, 300, 180. Therefore, we are able to identify that this will be a total of 980 employees. They have indicated the job classifications stating that all jobs at these locations provided to us, Gauteng, Western Cape, Free State, and they've provided the expected completion date being the 31st of December 2019, as well as the plan communicated that each employee will receive 70,000. Therefore, the 70,000 times the 980, which will be part of our measurement section. Okay. Then, on the right side, when first recognize the related restructuring costs, remember at the earlier of, we have identified in terms of number one, this is 31 August. Okay. In terms of number two, they've indicated to us that in terms of IFRS 37, that they have recognized restructuring costs or restructuring provision relating to IFRS 37 on 30 September 2019. Therefore, the earliest between these two dates, guys, I just want to indicate 30 September. Therefore, my 31 August should actually be green. Now, the earliest between these two dates will therefore be on the 31st of August 2019. They need to recognize the liability. Right, okay. Now, the amount. Remember, they've indicated to us that they will pay this within or by 31 December. Therefore, short term. They've indicated to us that this will be 70,000 per employee times the 980 employees. Therefore, 68.6 million. Therefore, we need to recognize a termination benefit liability as a short term, remember, because they will pay this within the next few months, before 12 months. And when you look at our year end, guys, at year end, 31 December, they will pay this. But if no payment was made, this will remain to be included at this amount. Okay, then in terms of presentation, just briefly, you know that this will be a short term, therefore this will be a current liability. And the expense portion will be included in your profit and loss.